Right, what's going on, everybody? Welcome to the second YouTube channel. Today, I'm going to be dropping higher time frame source on nasdaq, how to predict higher time frame moves before they happen. I've never taught this publicly, but here we are. And we're going to be recapping today's price action. So this is nasdaq on the 4-hour chart. What I was looking for today originally, before going into the market, I always have some form of bias. If that doesn't play out and we do something different, I'm always adapting to that. So my initial bias was we came out down here and we traded higher. We rallied higher, and pre-market price action was holding down close candles to go higher. You can see throughout here, all of these down close candles were holding price to go higher as we were trading toward this 4-hour gap. So pre-market, logically, if we drop to the 1 hour, it's making sense for me to trade up here. Now, what I did, I took longs initially on ES, okay? And you might be thinking, these didn't look like they worked out. They actually worked out really nice. So the initial target for me on ES was this 1 hour fair value gap, which it tapped. Now, what I was seeing pre-market, again, if I drop to the 5-minute chart, I always start pre-market on the 5-minute time frame. What I'm looking for is ranges. What's the range we're working within? And what I saw here was today's price action opened up, obviously, at midnight New York, all right? And what we'd done prior to midnight New York is important because it tells us something. So this is midnight New York, this delineation here. What we had done is swept out this range low. So we came down and swept out this range low down here, and then rallied higher from that point forward. So you have a connected range low to a connected range high. We then consolidated throughout here, which is fine. Price can consolidate. But I'm identifying the very first step is some form of bias, okay? Some form of bias. The second step is actually M5 ranges / M15 ranges, okay? Pre-market. What I'm looking for is one side of an M15 or M5 range to be taken out. And then I'm looking for 4-hour and 1-hour profiling. And I'll get into what this third point means because it is probably the most important part of my trading and what I teach to my one-to-one guys as well. So what you have down here is a range low swept. So we've taken one side of the range down here. How do you identify a range? The most obvious price swing on your screen, pre-market, and this was it. We came down swept, and look at the reaction down here. Is that reaction a market that's waiting around? No, that's a market that clearly hit a key level and displaced throughout here massively. And then we consolidated during London session, which means AM session can expand because small ranges equal large ranges and large ranges equal small ranges. That holds true on a higher time frame level and on an intraday level. So if London session consolidates and Asia session consolidates, typically you're going to see a big AM session, and well, that's to say the least, right? But I was scouting the longs originally, and so what do we have here? Some form of bias. I want to see this hourly fair value gap. Again, this is the orange shaded box. That hourly fair value gap traded up to. M5 ranges taken out, and we're working towards the range high. And then 4-hour and 1-hour profiling. So let's go to the 1-hour time frame. All right. If we look at this chart here and move that, what's happening here? Okay, like what is order flow? How is the market reacting to certain price levels? And you can see throughout here, every time we close above a down close candle, price is respecting it and going higher from that point. So throughout this, I'm seeing down close candles. Why are these two very important? Because these are the two that were birthed inside sell side liquidity. So what happened down here? People sold this breakout, meaning these two down close candles are very important because when we trade above them, we are shifting the price delivery. We're shifting the delivery of price. So now I want to see price hold. And every time we create down close candles, price closes above them, uses them on the other side to support higher prices. Now, H1 profiling. I am a New York session trader, so I'm looking particularly at the 7 a.m., 8 a.m., 9 a.m., 10 a.m., and 11 a.m. candles. 1 hour candles, that is. I'm profiling these candles. I'm trying to work out where the next one is going. Essentially, what I'm doing is where have we been and where the next one is going. So if I get rid of some of this noise and we zoom into this price action here, this was 7 a.m.'s candle. Okay, this right here. This was 8 a.m.'s candle. So what has 8 a.m. do? Well, first of all, we've got bullish price action. We've taken out an M5 range low down here. So I'm already leaning towards longs. And we also have a premium key level above us, right? With this hourly fair value gap. Then I'm bringing in hourly profiling. This is 8 a.m. 8 a.m. opens up, trades lower, takes one side of this candle out and closes above it. Now, at this point, mechanical traders are screwed because they say, well, it has to close inside the body. No, it doesn't, right? Not for our trading, it doesn't. Don't be that strict. You'll miss out on great trades. It closes. The point I'm making is it rejects the low. Look how far we close after trading below this low. So I'm looking at this market and saying 9 a.m. is predictable. So where was my entry? And I gave this pretty much as a signal to my private mentorship group, where you have these down close candles here. Okay, down close candles in a bullish market support price higher. We have that range high open. We have the hourly fair value gap unmitigated, and again we took out this range low back here. So what am I looking for? Well, this orange line here is that previous hourly candle sweep. Look at the rejection there. 5-minute gap holds. 5-minute down close candles holds. And then we're going into 9:30 and look what 9:30 does. This is 9:30's 5-minute candle right there. It trades down into that and rejects it. 9:35 closes well above this candle's high. So what my entry was that immediate rebalance right there. As soon as we trade back down into this candle's high, this should hold price higher. My entry was right there on that. My stop loss was below the down close candles, right? And then my target was a 1 to 2 originally. So 1 to 2 is right there. I basically pulled it when we hit the 1 hour gap. So this was my entry. I hope you understand the logic behind my entry. Again, we are, look how clean this is. Once you profile the hourly candles, every single down close candle or every series of down close candles, when I say down close candle, I'm usually referring to groups of them, like 3, 2 of them, whatever it might be. Down close candle holds price higher. Down close candle holds price higher. Down close candle holds price higher. And again, slight down close candle holds price higher. So I entered on this immediate rebalance. Now that is a valid entry because we've worked all of this down here already. Price has spent a lot of time down here. 9:30 is your catalyst for distribution, or it's your catalyst for speed, okay? Quickness to the market. That's what it's your catalyst for. And then we rally into the hourly fair value gap, okay? So that was my trade. And then if we go over to NASDAQ, time to teach some source. I'm a bit 50-50 on teaching this properly, but we're going to cover it. This is not it yet, by the way. I'm just going to point out what I was seeing here. So what I told my group today, I was waiting for in the live stream, it was one side of this to get taken out. Now, yes, we took the longs, and then I was looking for this after the longs came back down. I wanted a swing high to form on one side of this range. If we drop to the 5-minute time frame, you have a dealing range, okay? You have a range low and a connected range high. Range low, range high, all right? Very obvious price swing on your screen. Don't confuse yourself with it. Range low or range high, just the most obvious connected price swing on your screen. Clearly, this move had an impulse price leg down. This move is where the market reversed. So that is your range. And then we run into it at 9:30 and then drop lower and distribution happens from that point forward. The only valid entry for me here was really this. I did not get in on this because I was waiting for 11 a.m. to create a swing high and then we ripped lower. So if you look at the hourly time frame, again, you need to see a swing high created on the hourly time frame at these key levels. You've also got, what is this? In a bearish market, up close candles supporting price lower. And then blend that with your ranges on the 5-minute time frame. This will clear everything up for you. Okay, please start doing that. Swing high gets formed, and then 11 a.m. rips lower into all of these equal lows. So you have a range inside of a dealing range. And I'm not going to dive into this just yet. This is reserved for the other guys. But you have dealing range and you have a range high distribution. Okay, that's what you want to see all the time. This is bread and butter. Okay, key level here, range high, distribution lower. Now, the higher time frame stuff, right? Let's actually get into it, because if you've stayed for 11 minutes, then you like what I'm doing, and I appreciate the support. I really do. So I always try and give back. The way I want to give back here is how I predicted at this point here we were going to be bearish. And I know it looks like, oh, whatever, you didn't predict that. Ask any of my guys in my group, I did. Okay, and I don't say that to brag. I say that to show you what's possible with actual understanding and deep understanding of the marketplace. Friday, I knew was going to be bearish, right? Or I knew we were going to be bearish at some point soon, and then we displaced lower. Why is that? Well, first of all, ask yourself, what is the nasdaq 100? Like, at a fundamental level, what is the nasdaq 100? Well, it's the top 100 US companies. So the same way we use ES and YM for SMTs, okay? ES, top 500. YM is the top 30, right? Dow Jones. So if we can use SMT between these, can we not use SMT between stocks like Google? Or can we not use SMT stocks like Nvidia or stocks like Amazon? Okay, yes, you can. But when you find the leading stock, which is Nvidia, okay, and expect it to be Nvidia for a while, you can use this to blend in higher time frame intermarket analysis. So this is NASDAQ daily chart. If we go to Nvidia's daily chart, and there's a reason it's on my watch list, pay close attention to my videos, all right? What does this show here? Well, if we look at the monthly time frame, this is your monthly candle. What did the last monthly candle do? Well, we rallied throughout here, we rallied again, but then we closed back inside the previous monthly candle. Now that by itself does not tell you anything, right? It tells you F4, to be frank. It doesn't tell you anything. Candle closures are useless if you don't have context of the marketplace. That's why I say it's buyers first and then candle closures. They're great when you use them with narrative and context and pair them with other things. So Nvidia's monthly candle for May 2026 rejected this high, traded above all-time highs, and then closed back inside the previous monthly candle. Look what we did here when we opened up on this monthly candle, June. June opened up, traded higher, and reversed. You could have predicted this reversal on NASDAQ because of this chart. Okay, let's bring in another aspect of time. All right, don't believe me yet? Let's bring in another aspect of time. Quarters. Okay, quarterly opens. So you've got January, April, July, October. All right, those are your 4 quarters of the year. April opens up, trades higher. May opens up, trades higher, but closes back inside. So we're in a premium when we're up here, in this area here. We're in a premium. Why is that? Because the quarterly opening price is down here. So naturally, if you're above a quarterly opening price and, where's January's candle? A yearly opening price, you're naturally in a premium market. All right? Just using logic and narrative, you're in a premium market. And then you close back inside the previous candle after sweeping out buy-side liquidity. And then you have, this is the key, SMT. Look, this is Nvidia's daily chart. Look at these highs, and then comparatively look at NASDAQ's all-time highs. What do you see there? A massive SMT at all-time highs, right? And then displacement. So this is Friday's candle on Nvidia, right? This candle here, let me mock it up. This is Friday's candle on Nvidia, right there. This is Friday's candle on NASDAQ. Do you see the lack of momentum downward before Friday's candle on NASDAQ? Look at Nvidia. We've been ripping lower since last week, okay? That is where you can predict. So what is NASDAQ going to do? NASDAQ is going to play catch up with Nvidia, because Nvidia is driving it lower. Now, with that being said, there's a lot more that goes into it that I don't want to teach just yet. Okay, so I hope you guys found this valuable. If you want to work with me on a one-to-one level and have a call with me personally to see how we can get you to that next level, it is the only link in the description, the top link in the description. Apply over there, book a call, and I will personally hop on the call. We can have a chat about how I can get you to that next level. You can join the group and see what it's about, etc. That's the only thing I ask of you if you are interested in that. Other than that, I hope you found this video valuable, and I'll see you guys next time.